Right. Welcome back to the channel, y'all. I wanted to make this video explain a little bit more about market structure, because this week I do feel like the market is going to be bullish. And when I'm talking about my trading mindset as I'm going in for the trades and as I'm placing trades, I want you guys to be able to understand what I'm thinking, what I'm looking for in the market, and just try to be as transparent as possible. Because like I said, no one's going to win 100% in the market, but I've been doing this for a few years and I have built up some consistency, so I wanted to share what's helped me on the way. And hopefully you could take a piece or two out of what I'm saying and be able to combine it with whatever you're learning, and hopefully it'll make you some money. All right. Before we start this video though, I'll have to let you know I'm not a financial advisor. I am strictly just sharing information of what I've picked up over time. All right. With that being said, let's get into the video. All right. First things first. We're talking about market structure. All right. Market structure, last video we talked about how the market moves. It goes up in higher highs and higher lows, or lower highs and lower lows. So if the market's not doing that, you do not want to be in the market, which leads us to the first phase of price. Okay. We're going to be talking about 3 phases of price, and the first one is accumulation. Accumulation is when the market is going up and down, up and down, up and down, but it's not going higher high and higher lows. I'm gonna show you this example right here. This red box right here that you can see. This whole box right here. You can see that it's going up, right? It's going up, and this side it goes down. But what you really want to focus on is the market structure. So this is the lowest part at this point in time in the market, and this is the highest. The market never breaks this low right here. It breaks this high by a little bit, but as you can see, the next time it comes up here, it still doesn't break it. So then what happens? All right. I'm not even going to break it down what happens next, because it's going to lead into the next phase. But I want you guys to understand, just in case you're new watching this, the market, if it's going up and down, left to right, that's generally a zone I try to stay out of, which is why I marked it red, because you're not really going. That's not really where the money's being made at least for us. Okay. The banks are going to be in this area, taking out a lot of people, because a lot of people want to see the market just go up or go down instantly whenever they want. But the market doesn't do that. The market, the banks, they are going to allow people to place their trades hoping that it goes up and goes down. So say you placed a buy right here. You're probably going to aim for the market. Ooh, that came out bad. You're probably going to be aiming for the market to break this high right here. Well, if you started right here, you're going to expect the market to break this high. But what happens? Instead of breaking that high, it stops right here, goes down, goes down, goes down. It doesn't necessarily stop you out yet. But if you're going in for a buy and you started right here, you're probably going to be a little bit more nervous than you would if you seen the market up here. If you seen it up here, you're like, okay, cool, it broke a high. It should have hit this one next. But what does it do instead? It goes right back down. So you're right near your entry again. A lot of people will either take their trades out right here, or they might have moved their stop loss up more, and they're out of their trade, which allows the banks to do what? Fill all the orders that they need. Then once the banks and the institutions, they fill their orders, what happens next? It's going to lead us to our next phase, which is called the manipulation phase. This is where the banks, the institutions, the hedge funds, this is where they all enter the market. And like I said in the video right before this one, if you haven't seen that video, check it out again. But if you haven't seen that, we're talking about when the market makers, when they make their moves, they always leave footprints, gigantic footprints. All right. So as we can see from right here, we had this phase, the accumulation phase. Not a lot of money being made. It's going up and going down, going up and going down, going up and going down. Immediately after that phase, we see a shot, a huge shot. Look, this phase is completely unfilled. Not even a candlestick here. You see what I'm saying? You go from this point all the way down here, then goes down some more. This is the manipulation phase. This is the phase in the market. I generally have seen this on like Sundays. I'm not sure what October 30th was, but let me know if October 30th was a Sunday. I could be wrong. I'm not checking right now, but I feel this generally happens on like Sunday when the market is fresh and starts to open. But that's neither here nor there right now. manipulation, you're going to see a huge move down in one direction. Now, a lot of people get mistaken in this phase as well, because a lot of people try to take trades in the manipulation phase, when that's a bad point for me to enter the trade, because if the market wanted to, it could just break this box and then reverse and go up another direction. You know what I'm saying? So I usually like to wait for the manipulation phase to end so I could see what the market really is trying to do. Okay, so we have the accumulation phase up here. Then right after that, we have the manipulation phase. If you have any questions about what I'm explaining, I might not be explaining it best for you. If I'm not, please feel free to comment down below anything that you need me to make another video about, just in case. All right, but back to the video. So we have the accumulation phase right here, then the manipulation phase. We generally don't trade in either of these. We want to watch both of these end. So then in the next phase, the distribution phase, is where we enter our trades. Okay, so I'm going to show you why that is right now. So for anyone that's just beginning, I'm going to make videos on order blocks, fair value gaps, and things of that nature later on, and where to find liquidity. But for right now, only thing I want you to focus on is the different phases in the market. Okay, I want you to go on your own chart and figure out what is the accumulation phase, what is, okay, right here, when is the market going left to right, when is the market having a huge drop off out of nowhere. It can either go up or go down, but it has to be a very significant move. Okay, and it's going to make more sense the more that you watch these type of videos, because that's going to lead into the distribution phase. Now, the distribution phase, if you know anything about order gaps, fair value gaps, or order blocks, or where liquidity is, this is where you want to start using those structure blocks. So it'll help you be able to trade a lot more efficiently. All right. So, for example, you could have used. I'm gonna take this box away just so you can see better. Like I said, there's a huge gap in the market right here. Right. You could easily put a box from right here to right here. You could have took a trade off of that. Or if you don't want to use the fair value gap, you can use an order block. You could have waited until this move right here. I'm about to show you. Give me 1 second, y'all. You could easily have waited for this fair value gap to get entered and filled, and you would have still been positive. You still would have been in profit, because you would have been able to take a short right here. If you wanted, put it to the bottom of this fair value gap, or to this order block right here, and then go down to the lowest point in the market. That would be a 5 to 1 risk to reward ratio right there. Easy 5 to 1. And as you can see, it goes lower than that. It actually goes down to pretty much a 8 to 1 risk to reward. But I don't want to move too fast. I'm really trying to break it down for you guys, because after the market manipulation, the market is going to tell you what direction it wants to go in. After the market tells you where it wants to go, now you have to wait for it to distribute the rest of those funds in that direction, because it has to correct itself. The market has to correct itself. It's going to get your stop losses the same way it has to stop you out to get its money, and the same way it has to accumulate. It has to distribute the money back in that area, in those areas. So this whole blue zone right here that you could see is going to be called the distribution phase. This is where we go back from going left to right, to we see the huge move in the direction it wants to go in, to now we're seeing the lower highs and lower lows. Like now back to the first video I made. You see the high right here. You see a low right here. This high is lower than this high. This low is lower than this low. Now it goes back up, retest this zone right here, the zone of our order block. And then what happens after that? Another low, another lower high, another low, lower low, another lower high, lower low, and so on and so forth until we're down here. So that's what you want to wait. Then that's why it's so important to understand the phases in the market. Because once you understand the phases, you understand where you should be taking your trades at and why you're taking your trades. If you see the market going back and forth, up and down, up and down, up and down, left to right, now you can at least look at it and say, okay, let me stay out of the market right now. It's in the accumulation phase. Or you're going to wait till the market makes a huge jump in one of these directions, aka right here. I'm not saying it's going to be on a Sunday every time, but generally when I have seen it, it has been on Sundays. You see a huge jump going down into the market distribution phase. And then in the market distribution phase, that's when we start looking for order blocks, fair value gaps, okay? And that's how everything is going to connect. Because even if you can see right here, after we had the market manipulation, we have a sleep of liquidity right here as well. The market liquidity got swept right here and then dropped, which in turn, where did it sweep at? It actually swept the order block. It wasn't just a random part where the market just swept a random high. It swept exactly where our order block was and then dropped down. Now, this is a lot easier said than done, especially in the moment. So I want you guys to practice this, practice seeing this on your charts, and practice on a demo account for as long as you need so you catch these moves in real time. And once you start seeing these and seeing how the market moves in phases, it should help you a lot more. And yeah, that should, hopefully, if you understand that, it should improve your trading. Depending on where you're at, it should improve your trading a lot. But yeah, this is how the institutions are trading. This is how to know when the institutions are in the market and how to identify them without being faked out. Like I said, if you're waiting for the distribution phase, then the market manipulation phase won't randomly take you out the market. If you entered here, say you wanted to place a buy right here, thinking, okay, we're at a, what do they say, a floor. Some people say it's a support level. Say you were saying you got a support level because of this order block right here. Right? Say you use that order block. If you use that order block and put a sell right here, you would have got knocked out the trade. And you would have been like, why? You would have been complaining, thinking the market has something against you. When in reality, you're just in the accumulation phase. And because you're in the accumulation phase, the market manipulated just how it normally does and how it's always going to be. And then the market distributed in the direction that the market actually wants to go. So take it step by step. Watch out for your accumulation areas. Watch out for your manipulation areas. And watch out for your distribution areas. If you could find out which area you're in the market, it'll make it a lot easier to know when to place a trade. Because if you could find out when you're in the distribution phase, finding order blocks, finding fair value gaps, and finding sweeps of liquidity is going to be super easy for you. All right. I'm not going to make this video too long. This is another video on market structure. I just wanted to make this and hopefully help somebody out. So if you like this type of content, if you like me talking about the market, if you like learning different phases and how I trade, if it makes sense to you, please like, comment, subscribe, and share with somebody that you may know so they can chase financial freedom and be on their way as well. So thank you again for watching. I appreciate it. And in the next episode, we're going to be breaking down a little bit more about probably one more video about market structure I want to get down. And we're just going to leave it like that, y'all. So I appreciate y'all again for watching. Until next time, I'll catch you guys later.